Is the real estate market in Calgary going to crash? Well, if you ask some of my YouTube commenters, they would say yes. From what I see right now, I would say no. Let's do a quick crash course of what that actually means. A correction is a drop of more than 10%, and a crash is a decline of more than 20%. So when you start to look at our numbers right now, we would see that we're actually only down 2.2%. So we're not even remotely close to correction territory. We are seeing regular, normal seasonal adjustments going into the winter months. People are anticipating rate drops, which has happened. We've seen another 0.5 rate drop today. And the market is still relatively strong compared to long-term trends of what Calgary has been through in the past. So let's dive into that. Now, my name is Adam Fyfe, and I am your Calgary realtor. If you want to set up a game plan because 2025 is your year to make a move, go ahead and book a call. If you want to know what your home is valued at in today's market, it is absolutely interesting to see how much pricing is fluctuating in this current state. And a lot of people are curious about that. But let's continue on. Apartments. If you want to read this on your own, go ahead and skip to the next chapter. Sales in November slowed over last year's record high. However, the 429 sales were 47% higher than long-term trends. New listings for apartment style units have been on the rise with 1,500 units available in November. More supply is now available than during the spring, and it is the only sector to see levels rise above long-term trends for the month. The additional supply caused the months of supply to push above 3 months and is taking some pressure off of home prices. As of November, the unadjusted benchmark price is $337,800, down over last month, but still 9% higher than last year. Supply has improved for units priced above $200,000, but most gains have been the $300,000 to $500,000 range. Okay, so we're still above long-term trends for activity, but we're starting to see more inventory from new listings. So the apartment prices right now, as we mentioned, are still up almost 9% year over year, but we're down $4,000 from last month. So let's just take a quick peek here at what's going on this month. And you can see that in terms of sales, yes, we're down. Last year we saw over like 130-ish sales compared to what we were last year. New listings were actually down, which is good to see for this market. I was a little bit worried that we're going to see a huge influx, but the inventories are up dramatically, right? We're almost double. We only had 900 units in the entire city. Now we're at about 1,500 units. Bigger thing to note though is look at the days on market. The average days on market is at 45 days, okay? Let's remember that in January, I gotta stop using that mouse. In January of 2023, we're at 44 days, right? So again, looking at long-term trends, it's nothing too wild, but when we're looking at what we've been used to over the last little while, yes, 45 days is definitely buyer market territory, okay? So when we look at the sales here, year-to-date sales, right, last year, this year, you can see that we're actually up in price, even though we're down in sales. New listings year-to-date, we're actually up 12%, right? So last year at this time we had 93, this year we have about 10. Inventory is up. Months of supply, right? We don't look at the year-to-date average, we actually look at the month. The month of supply is at 3.5%, very clearly a balanced market, very fast approaching to a buyer's market. Sales to new listing ratios is down considerable, right? Last year we had 80, this year we had 68, especially if you look at the month itself. Last year it had 83 sales to new listing. This year we have 65. Again, really showing that it's more of a balanced market. Sales to list price is down. Days on market compared to last year is up quite a bit, okay? Pause the video if you want to touch on this. This is just the price points in the year to date in the month of last year. I'm not going to touch on that. You can see last year, year to date, we had a lot of sales in the $200,000 price range for apartments. This year, look at the shift, right? You can see the 300s and you can even see the 400s dramatically increase from last year. So even though the total sales amount is down, we're seeing a higher sales price for those apartments sell a lot quicker. Obviously, the prices have increased, which is obvious here. So with that being said, yes, the market is starting to slow down. It's great to see inventory falling a bit. The sales have fallen a bit. I would imagine that there was some anticipation that there was going to be a big a percentage decrease in the benchmark price, in the interest rate, which it has. So I would imagine December is actually going to see a small uptick. You can see last year in December, we only had 400 sales, and it was one of the hottest years on record, right? You can see how little of inventory we had. Obviously, this year we're going to have, again, upwards of 1,400 units left over at the end of the month, but I would imagine we're probably going to see an increase in the sales compared to last year, okay? So Total inventory by price range, not going to touch on this very much. You can see that the $300,000 price range in the entire city has one of the most amounts of inventory. I can guarantee actually if you break this 7 to 1 million, 300 would actually stand out with the most amount of inventory, right? So you could get a really good deal, or if you're actually going to list your $300,000 condo, be careful. Make sure that you're going in at a competitive price point, okay? Now, I do want to point out that the colors on this do have all of the quadrants, and all of the quadrants are here. Not only the street abbreviations, but the actual quadrants themselves. So in city center, you're gonna have all 4 street abbreviations: northwest, northeast, southwest, southeast, right? South, you're gonna have southwest, southeast. If you're curious about that, go ahead and ask, because this is how Calgary is actually broken down in terms of the quadrants. There's 8. Now, sales by property type, okay? Not gonna touch on this too much. Obviously, we can see the city center for apartments is always gonna see the biggest amount. South Calgary is also one of the larger quadrants in the city, so they always have a little bit more. Everything else is kind of roughly at like 30 to 50 sales, okay? Months of supply, obviously slowing down, inventory increasing. We are going to see some sort of price corrections going into 2025, but I don't think we're going to see any sort of, I said price corrections, but now I need to actually learn the proper terminology, because we're probably not going to see price corrections in 2025 of a decrease of more than 10%, but we might actually see some stabilization. I would argue that we're probably going to have a fairly busy year in 2025. So months of supply, going back to that quadrant portion, you can see that apartments in general are the highest months of supply in terms of all property types, meaning that they are the slowest market. You can see Northeast here has a astronomically high amount of inventory. They had a bunch of projects that closed this year and just not enough buyers moving to the Northeast to actually absorb that. So if we're going to see any major price corrections in any quadrant, it's going to be Northeast. Okay, let's keep that in mind. North, City Center, and South all are still in balanced buyer territory, whereas if you look at Southwest, West as well as Northwest, they're still in seller territory. I screwed up those words. We're kind of going, wow, I actually really screwed that up. Balanced conditions going to buyer territory, but here we are, balanced conditions still in seller's territory. That's a problem when I try to actually record these things all in one take. It's basically a presentation that I can't screw up, and I like to twist my words sometimes. So, Southeast, Southwest, Northwest are all still in that seller territory. So you have a little bit more competition as a buyer. As a seller, you have a little bit more leverage compared to other quadrants in the city. So benchmark price, okay? This is super important for anyone who is curious about what benchmark prices are. So you can see that they all look relatively the same. But like I say in every video, we need to make sure that we're actually putting the attributes into play. Now the attributes are linked in the description. You can scroll down. This is a free spreadsheet that I've created. You can see that there's lots of different things. So as an example, East Calgary is a 2004 built, 852 square feet. Let's just go down to Southeast. 2015, 901. Very large difference there. So when you start to look at these price points, you've got to make sure that you're putting that into perspective, right? Where the Southeast and the East clearly are, different attributes, but you can see that the actual product type itself is also different. Okay, so you want to make sure to put those attributes into play and actually put them, compare them properly. So let's move on from here. Year-over-year growth, apartments actually saw the most growth, right? Most affordable product in Calgary. You can see that they're still hovering around that 10%. You can see that South and West have seen the biggest increases, about 13 to 14% year over year, where it's City Center, Northwest as well as Southeast, all below 10%. Still pretty large increases over last year, but we're noticing that benchmark price started to slow down a little bit. So we'll see if we get into negative territory, which is interesting, and I'm not sure if that's going to happen quite yet. So you want to know what your home is valued at. Super rad tool. This is an instant home evaluation. It's really slick with condos. It's fairly accurate with condos. It's me that looks at it. Yes, I'll probably reach out. Yes, I'll probably call. I'll send you a video introducing myself and going through all of the different things that I could offer behind the scenes. But you can either scan the QR code or link in the description. Now, the MLS is super fascinating, okay? So a lot of people reach out to me asking questions. We need to utilize the MLS as much as we can, right? We can look at this and determine what is actually happening in this market based off of the data that's provided to us. Very data-driven, a lot of interesting things going on. Like even if you look at Beltline here, right, you got a couple pending right off the hop, 2 days, 4 days, right? You still have some movement in this market. A 2.5 actually went pending within 5 days. Didn't see that one coming. You can see a couple other ones here, Chaparral, Lower Mount Royal. So there's still some movement relatively quick on some apartments that are priced well, but you can see how big the gap is between all of the actual actives. I would actually be curious of how far I'd have to scroll down. 7 days. There was the fastest sale for the most recent data for apartments is a Dover sale for $250,000, 2-in-1, right? So it's at $19.95, actually a pretty good deal for $250,000. We scroll all the way down here even more. The next sale was 10 days, right? It took 10 days Point McKay, and it took 10 days for Spruce Cliff, right? Still some movement, but absolutely slowing down. Just keep that in mind, okay? Microeconomic breakdown. This is the kind of the information for all you property quadrants out there. Okay, now I'm really twisting my words. So we've got our sales, we've got our new listings, we've got our sales to new listing ratio. Look at the Northeast, 38%, very clearly a buyer's market. 6.31 months of supply, down 78,000, surprisingly only down $700 from last month. Okay, this is previous month, this is last month. Overall, they saw over $8,000 decrease in Northeast alone. Okay, now when you start to look at this, Northwest, right? They had more sales than they did new listings, 126. Still seller-ish market, yet we're seeing price decreases in that quadrant as well. People are starting to realize that there's more inventory or selection on the market, so they can drive those prices down. So buyers, do your research. Sellers, do your research, right? These are different things that you need to consider when getting onto the market, right? One piece of the pie, but very important to consider. Now, City of Calgary, apartment price change. Interesting stuff. Will we dip down to the negatives? This is going to be the property type that actually does it. If there's going to be one property type in Calgary that dips into the negatives, it will be apartments, and it will be because there's so many new construction options for people to choose from. When one complex comes to the market, right, yes, they have to have 70% of their units sold, but at the same time, a lot of those investors sell their product within the first week, right? Speed to market is very important for you investors looking to sell your units, but you have to be very careful because I've seen it firsthand in 2024. 30 listings come to the market, and then all of a sudden, there is just way too much to choose from, and you have to stand out in terms of price point. So for buyers, and you're looking at new construction, do your research. Have some patience. You investors out there selling your product, take your time, act quickly, but you have to make sure that you're doing your research to see how many things are going to actually pop up in that market. Speed to listing is very important there. So going down the rabbit hole here. Are we going to slow down? Absolutely. Are we going to get into any sort of negative year-over-year space, right? So we're going to draw a line basically right here, dropping down to like 330. Then we start to dip into the negative year-over-year. I think there's a possibility of that, but at the same time, I think that there's a lot of strength in the Alberta market, right? We've seen a rate decrease, which is going to spur activity. When you start to look at some of the job increases that Alberta is seeing, we're at the highest level in over 7 years. The challenge is that we're not actually creating enough jobs for all the new residents coming. When you start to look at the type of jobs that are being created in Alberta, finance and insurance, all the services are seeing the biggest increase. It's a little bit of a lower bar, a lower entry level for a lot of those professions, and it's easier to do part-time, so we're seeing a pretty big increase of people going into there. Manufacturing, healthcare, and social assistance is also creating jobs in Alberta, which is great. Agricultural, actually pretty depressing, to be honest with you, is the largest decrease in employment. Would love to see some provincial government intervention into that to spur up some sort of agricultural growth. I need to actually look into this in a lot more detail. Alberta oil and gas is seeing higher and higher outputs. Yes, a lot of people don't like oil and gas. We want to phase away from it. But at the same time, if we don't want to see any sort of market crashes, this is actually going to help the Alberta economy. The startup of the Trans Mountain expansion is obviously to play here. There will be, and interestingly enough, there will be some sort of constraints once it fills because Alberta just loves to pump their oil. And then the tariffs, right? We need to also realize that there could be some potential tariffs coming to the Alberta market, which will definitely shake up a lot of things. Now, on a lighter note, we are seeing a lot more oil production going to Asia, which is great. We went from effectively 0 to about 515 million between June and October, which is great. So, yes, we're starting to diversify, which is great for our economy, but it's definitely one of those things that we want to keep an eye out for. So, all of these articles are linked in the description. All of the things to do is something that we do every couple of months. These is also linked in the description. If you're looking for things to do around Calgary, this is absolutely fantastic. So, like mentioned, my name's Adam Fyfe. Thank you very much for everyone who's actually watched these videos and subscribed and commented. Go ahead and ask your questions. I'm more than happy to take the time here and reply to everything that I can and provide your information, right? Like I'm asking about like agricultural stuff. go ahead and like comment some stuff. You know, send me some websites, send me some charts, send me some graphs, some forms, and all that stuff, because I find that stuff super interesting. If I'm going to bring it to you, you might as well be the one who provides the information to me. So thank you very much. You have yourself a lovely day. I'll see you soon.